This is Bruce for Spartan Capital Markets, taking a look at the weekly technical market report newsletter for Sunday, May 7th, 2023. This week's coverage includes the Aussie dollar, euro dollar, pound dollar, dollar yen, S&P 500 index, and US dollar index. So starting with the Aussie dollar, so what is interesting here is that we had a failed breakdown of this bearish flag pattern, and the reaction has been clearly bullish with the weekly close above the downtrend line, a daily close above the 34-day exponential moving average, and a breakout of the trend line in the relative strength index, momentum oscillator. So failed patterns many times lead to the sharpest moves, and I think we may be in the beginning of one of those here with the Aussie dollar. So this deserves to be watched from that perspective, keeping in mind there's potential significant resistance here at the 200-period exponential moving average and the 38% Fibonacci retracement. But I think we might be able to break through that because we also have a double bottom potentially here with the breakout above this swing high here. So anyway, that's the Aussie dollar. Looking interesting because it hasn't been moving. So it would be nice to see it start to move again. Then we have the euro dollar. The euro dollar has been going essentially sideways for the last 3 weeks up here, pushing against resistance, trying to get through, and cannot do it, yet it's not falling back either. So you see the 34-period exponential moving average here, the orange line. Price has not even come down to it. It hasn't even been tested. So this is showing strength, and given that the pound dollar has a similar pattern, but is up here in price, it's leading the way, I would expect to see the euro to follow the pound dollar's example. That means that any type of weakness may be short-lived, and it's going to be a great opportunity to jump in this baby and ride it for potential new trend highs. And all signs are that it is going to go to new trend highs. At the same time, a break below, always has the potential to keep dropping as well. Nothing is for sure in the markets. Then we have the pound dollar. The pound dollar, you can see, relative to the previous high and this sideways consolidation, it's up here, whereas the euro's down here. That's what I was mentioning earlier. So this is bullish. We have an initial target of concern here around the 2713 zone, which is Fibonacci extension plus the downtrend line, plus a previous high here with this dash line. But the higher target zone is up here around 3034 or so, and that's derived by Fibonacci confluence plus a measuring objective of this rectangle. So we just take the high to low, we add it on to the breakout level, and that gives us somewhere up in that zone as well. So I think, if we can get above this trend line and stay above it, the pound dollar has a good chance of eventually reaching that target zone. Then we have the dollar yen, and the dollar yen has been trending higher within an ascending channel. There's no reason to think that won't continue, and there is reason to think it will continue, given last week's price action where we pulled back sharply. A perfect opportunity to drop and drop and drop and keep going for the bear trend to kind of kick in, and that's not what happened. Instead, support jumped in at the 88.6% Fibonacci support zone, and the daily closes were each above the 200-period exponential and 34 moving averages. The orange is 34, the blue is 200. And the uptrend line, confirming the significance of the uptrend line. So, and then we had a bullish reversal because we broke above Thursday's high, although we didn't yet close above it. So that's all bullish, in addition to the fact that the two moving averages are merging here, and that means low volatility, and what follows low volatility is an increase in volatility or higher volatility or trending. So let's see if that kicks in and it starts to trend or continues to trend and maybe breaks above this high right here or this 137.91. At that point, it triggers a continuation of this evolving uptrend. At that point, we have a higher swing high. We have a swing high here, but it's not a higher swing high until this high gets above that. Okay, and that's the definition of an uptrend along with the higher swing lows. So that's the dollar yen. Then moving on to Hathaway analysis, where Scott Hathaway utilizes some of his proprietary geometric analysis along with some other geometric analysis to look at the markets in a pretty sophisticated and unique way. And what's fascinating about it is how many connections there actually are. It's just kind of mind-blowing sometimes. So here, the parabolic grid is deployed, and we have 1, 2, 3 horizontal, 4 horizontal, and the vertical here at 1, and then 2 is off. And then a parabolic curve is added on down here. So a number of relationships are identified with the blue and red arrows. And then the analysis is further defined to identify the symmetrical triangle type pattern here off this intersection here and this intersection here. And it tells us some key support and resistance levels. So if we break the key support level, we're going to keep going lower. If we break the key resistance level, we're probably going to keep going higher. That's the bottom line. And something should happen very shortly. As you see, these two lines are getting very close to the apex. So we've got maybe another week maximum to go before volatility picks up. And then finally, we have the U.S. dollar index. U.S. dollar index being having tested a major support zone here between 100.96, 100.57 for the last 4 weeks or so, and has not been able to break through. So that either means we're breaking higher instead, and if we do that, the target zone is up around this previous swing high at 105.75, and if we break below the low, then there's a target zone down here at 95.71 by the week of June 19th. So that is interesting to see if on a timing basis it actually hits around that time. So that's it for me this week, traders. I hope you found this a little useful and a welcome compliment to reading the newsletter. Great luck out there in the trading, and we'll see you next week. Have a great week.